All right. What is up, traders? What's up, tycoons? Super excited for today's video. We are going to talk about Schwab, okay? Charles Schwab, ticker symbol SCHW, the multi-trillion dollar asset play that just gave you billions more reasons to buy. And in summary, today's video, we're going to go over how Charles Schwab's net new assets in May totaled $24.6 billion, a decline from the same month last year, but a significant increase from April's $13.6 billion. And the number of active brokerage accounts increased by 63,000 in May, while total client assets grew for the third consecutive month to $7.65 trillion. Right. So lots to dive into on Charles Schwab. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the full disclaimer. Okay. Now, we're also going to take a look at the technical analysis as well, okay? And we're going to take a look at the daily structure and signals we have here. We just broke a very important trend line after putting in a triple top and an overhead supply zone. We've got some key levels of support as well as some gaps down that we really need to pay attention to, as well as the MACD and the RSI. Then we'll look at a much more macro chart here, going over the different RSI and MACD signals and how they have been, a really good indicator here. So we'll break down all of that in today's video as well. But we're going to do that in the later half of the video and dive into a little bit of the fundamentals right now and some of the bullish fundamentals. The technical analysis doesn't look the best right now, and it does suggest we have a little bit of room to drop, potentially here before rallying more. So let's go ahead and get right into it. Before we do, I want to mention that you can always email me for a one-on-one Zoom coaching session at zackleytrades@gmail.com. If you're interested and you want to learn a little bit more about some technical analysis or some different trading strategies, feel free to reach out at any time and I'll get back to you as soon as possible. Also want to mention today's sponsor, Simply Wall Street, a really amazing platform that I've used for a while, and I'm glad to have them as a sponsor. They have a magnificent app and a really wonderful website. All you have to do is use the link in the description below, and you guys can get a 14-day free trial and up to 40% off for the first 100 people that join. And, basically what they do is fundamental analysis. So you can type in any stock that you want to research or some stock that you've been looking and really interested in buying, and you can see if it's potentially overvalued or undervalued, and dive, deeper into the fundamentals. If you're not a pro, Simply Wall Street has a great team of professionals doing all of the work for you and making it very nice and simple, easy to understand. Now, in early March of this year, concerns raised about a banking crisis that had begun. The worry was that it could cause a domino effect, with one banking failure resulting in the failure of additional firms. And a number of banks did fall during this time, largely those with high amounts of uninsured deposits and ones that had a great deal of exposure to some of the riskiest companies out there. But it seems as though the market threw the baby out with the bathwater. Many financial institutions saw steep declines in the price of their shares, and this occurred even when the declines were not warranted. Since then, things have died down, but many of the financial institutions that saw their share prices collapse have not staged a full recovery. One such example can be seen by looking at investment in banking giant Charles Schwab. Now, from its closing share price at the end of February, which is about 2 weeks before the bottom fell out, until shares hit their 52-week low, the price of the stock plummeted 41.9%. Now, since then, we have seen a nice recovery, but even with that recovery, shares are down 28.4%. Previously, I saw this as a buying opportunity. Now, I do recognize that my stance on the company should change based on what data comes available, but fortunately for investors, management just revealed some additional results, and while the company has shown some weakness in some respects compared to last year, the overall financial picture for the company is very solid. So they're still an excellent prospect. Now, just the other day, the management team revealed some financial data covering the month of May. While I don't believe it's necessary to go over each individual data point, there are some that are incredibly important to cover. For starters, the one that I think is most important is the value of net new assets that comes onto the company's platform. For the month, this number totaled 24.6 billion. Now, even though this represents a decline compared to the 32.8 billion that the company experienced the same month last year, it did represent a near doubling compared to the 13.6 billion recorded for April. And so we have net new assets in blue in billions, and then you have the core net new assets in green here in billions. And this is what we're talking about here, a near doubling, okay, from that 13.6 to 24.6. Now, there's another way to look at this particular metric. The alternative version of this metric is referred to as core net new assets. Now, this strips out significant one-time events such as those involving acquisitions or divestitures or large contracts that expire or are won by the company. Through this lens, the picture looks even better, and for the month of May, core net new assets came in at 20.7 billion. This compares to the 2.3 billion outflow experienced only 1 month earlier. Now, when they mention acquisitions and stuff, TD is one that they just got. Okay. So, the Thinkorswim platform, TD Ameritrade, they are now, all right, a part of Charles Schwab. Okay. And there are obviously other important metrics that we should touch on. Another one I place a high value amount of value in, it involves the brokerage account activities of the firm. And the first metric that pops to mind is referred to as the new brokerage accounts. And these are new accounts with the company's brokerage arm that are opened up during the month. In May, this number came in at 314,000. This was down from the 331,000 reported 1 month earlier and compared poorly relative to the 323,000 reported the same month last year. But it is important to keep in mind that it is still well within the historical average for the enterprise. And over the past 12 months, there have been 5 months where the number of new brokerage accounts was lower than what the company reported for last month. All right. And again, that's what we're seeing here. Okay, you can see in blue, all right, the active brokerage accounts in thousands, and then you have the monthly change in active brokerage accounts in thousands here in green. All right. Now, due to attractive market returns and continued net new assets, the company has seen the total value of its client assets grow for the third consecutive month. In May, this number came in at 7.65 trillion. That's up from 7.38 trillion reported for February of this year. To say that everything was great for the business. Now, average interest earnings assets for the companies continue to drop. In fact, this metric has declined each month for over a year now. Back in April of last year, for instance, it totaled 636.7 billion. Now by April of this year, it had declined to 493.2 billion. And last month, it came in at 483.4 billion. The decline in interest net earning assets on its books, combined with a temporarily compressed NIM, which is your net interest margin, should result in revenue coming in between 10% and 11% lower than with the company experienced in the second quarter of the 2022 fiscal year. Analysts had been forecasting a decline of about 6.4%. Right, and we're looking at total client assets in billions here on this chart right here. That's essentially what we're looking at. Now, there is one more thing that I'd like to touch on. Part of the company's asset problem is that overall bank deposit balances have been on the decline as well. With higher interest rates, depositors are seeking more attractive yields, and that has served as a draw on pretty much the entire financial industry. When it comes to Charles Schwab, the pain has been palpable. Back in May of last year, for instance, the company had 155.7 billion of bank deposits. That number has declined every month since then and now totals 103 billion. The good news is that the declines on this front are slowing materially. The drop from April to May, for instance, was only about 200 million. At the same time, the company is seeing a nice inflow of capital into its money market funds. That's where a lot of people are putting their money, is in money market funds right now, as well as treasuries. Now, these experienced an all-time high last month of 384.9 billion. That represents a nice improvement over the 368.5 billion reported for April, and it is significantly higher than the 158 billion the company had 1 year ago. And so we can see here in green, the money market funds numbers in billions has been on a sharp incline, okay, even though bank deposit account balances are declining right here. So that's what we're seeing in blue, and then we're seeing the money market funds, increasing in the billions. All right, so the takeaway, it would be disingenuous for me to sit here and tell you that everything is going fantastic for Charles Schwab and its shareholders. Because of current economic circumstances and concerns over the banking industry, the company has faced some pain. The good news is that it continues to grow its core operations, and in the long run, the larger amount of assets on its books will ultimately create more value for its investors, and this will take some time. But given what the long-term outlook is, I have no problem keeping the company rated a strong buy for now. So we'll actually dive into some of the technicals, okay? And, we're talking about more long-term, it could be a good buy right here. But short-term, the main things that I'm looking at right now, okay, is going to be on the RSI and the MACD combined with some of these gaps down. That's what these blue boxes are. Now, gaps particularly tend to fill about 90% of the time historically in the market. Sometimes they fill within days and weeks. Sometimes they take months and years. And we have some gaps from the 2020, 2021 bull market, okay, that we haven't really seen a correction on. Okay. And those are going to be below 45. And we have one right here, right around $35. So, if we do end up seeing like another round of the bear market, or we see more bank failures or different things like that, there is a strong possibility that we could come down to some of these price levels. The main area of concern to me, okay, is the bearish divergence that we have, which if you're not familiar with that term, what we're looking at here is a high, higher high, right? So clearly the price of the stock was in an uptrend here, but what we were seeing on the RSI, which this is your relative strength index, so it's going to measure the relative strength of a stock at its given price. We see high, we see lower highs, right? So we're actually losing relative strength as the price of the stock is going up, right? And eventually we see this big crash, okay, largely due to the bank collapses, not so much just because of Charles Schwab. It was a very big head and shoulders right there, too, with the left shoulder head, right shoulder here. We broke that neckline, had a massive puke to the downside. All right, but what's concerning me is that we came back up to this bearish divergence trend line and we were not able to break through. Okay, that's what we want to see. All right, if you're looking for short-term positive action. So we are rejecting it and heading back down lower. The more times you test the level or trend line, the weaker it gets. So maybe the next time we come through here, maybe that's when we can break through and try to flip this to support rather than resistance. But for now, we just hit that peak, it seems like, and we're starting to move back down in relative strength. The MACD is also very, very close to rolling over right here and curling down below this yellow line. That's been a very strong sell signal anytime we've gotten that in the past. You can take a look at the times when we got the MACD sell signals, followed by sharp moves to the downside, as well as over here, sharp move to the downside, right? Over here, sharp move to the downside. And most recently, of course, we had the huge MACD sell signal over here, sharp move to the downside. All right, if we actually zoom in a little bit more on the chart, we can see the MACD a little bit better. All right, and this is our daily time frame again, and look what's happening. The MACD is just now beginning a curling over process right here, okay? So it just crossed below the yellow line. It doesn't mean that it has to curl down below all the way and get down below zero, but if that does continue to happen, that could signify, a strong move to the downside. Now we have this, triangle pattern right here, okay, which is normally a continuation pattern. And we did not have bullish continuation heading into this, right? The trend was obviously a downwards trend. And if we're going to get that continuation, we know now that we've broken this trend line here, there is a strong chance we could see a pretty significant drop to the downside. If you take a look here again on the RSI, we're rejecting that bearish divergence trend line and we're heading lower, testing right around 50 on the RSI. If you get below 50, that generally means that you are in the bearish territory of relative strength of the stock. I do want to also point out that we have the year-to-date anchored VWAP right here trading below that. So that means that traders, on the year on average are essentially below and red on their price. Okay, we have the month to date here as well in yellow, and you can see we're trading below the month to date. So, if you're a buyer of Schwab to basically in the past year or the past month, okay, you most likely are down on your shares that you just recently purchased. All right, so that's kind of breaking down what we're looking at from a technical analysis perspective. Again, we did put in this triple top here, okay, based on this supply zone that we formed. Now, triple tops, I like looking at these for potential breakouts, okay, because again, the more times you test the level, the weaker it's going to get. We've tested it here, here, here as well, okay? And if we were to potentially re-enter into this zone, the likelihood, okay, increases, the probabilities increase that we could get a breakout, retest, and push up higher. Now, for now, the year-to-date anchored VWAP is trading at about 57.50, maybe 57.25. So if we do get a breakout above this area here, that's going to be a key area of interest, okay? Market makers tend to sell and buy at these anchored VWAPs. And the larger the time span, so of a yearly or a monthly, oftentimes the larger the order from market makers and institutions. Okay, now there are some key levels of support that we could remain bullish above. Okay, so ultimately, until we have this strong move to the upside, okay, from down here about 46 all the way up to about 56. And if we pull back to these three levels here, this is healthy retracement territory to potentially continue the uptrend. Okay, we have the 38.2% retracement level at $52.16. We have the 50% retracement level here at $50.93. And we have the 61.8% retracement level here at $49.70. If you're not familiar with those are the three most common and well-respected Fibonacci retracement levels. Use those because nothing moves in a straight line down and nothing moves in a straight line up. You get a move up, retracement, continuation higher, or you get a move down, retracement, continuation lower. So we've had this strong move up. We have had no retracement to the downside. All of this is healthy retracement territory to potentially continue that uptrend. All right. And, that's essentially how you want to use the fibs, all right, is to identify that trend continuation. But you can also use it to spot trend reversals. So if you break through these levels, right, if you move up, you retrace, and you start to consolidate and break through those levels, then that's how you can spot a potential downside reversal. And that's what we would be looking. Okay. So 49.70 is going to be really about the line in the sand for me. If we come up and we retrace and we flip this area to resistance from support, the likelihood that we come down and fill this small gap down here to about 48 increases a lot. And if we, blow through those and break through our recent lows at $46, there's a very strong chance that we come down and fill this gap here right around the $42 to $44 region. Okay, so that's the main things that I'm looking at on Schwab from a little bit more of a fundamental standpoint, and then also a nice technical analysis for you guys as well. Hopefully you enjoyed today's video. Smash that like button, subscribe to the channel. Don't forget to email me at exactlytrades@gmail.com if you guys are interested in a one-on-one Zoom coaching session. And also check out today's sponsor, Simply Wall Street. It's a really amazing platform, and there's a link in the description below, as well as a pinned comment down below as well. And remember, you can get a 14-day free trial and up to 40% off for the first 100 people that join.